And you're seeing that in London. You're seeing that in the COMEX now. And I don't know. I think that this is going to be a story that gains a lot of traction over the coming weeks and months. I think that the price of silver is just beginning. $96 would be the next technical resistance level, if any, or that would be the projected next place to go. A different narrative unfold amongst these banks that maybe the game is over, and survival would mean breaking ranks and covering and getting out. You see one of those European banks do that, and then the whole game just implodes as the price skyrockets and shorts get squeezed and they cover, pushing the price up higher. This is a big deal, and I think it's just beginning right now.
Silver has baked gold in 2025 by a margin of approximately 71% as compared to gold that is 54%. This was the third month in the last 50 years that silver prices were high. The other highs in silver prices were the January 1980, when the Hunt brothers purchased a third of all the silver in the world, as they tried to corner the market, and 2011 following the U.S. debt crisis when silver and gold were adopted as safe havens. The Silver Institute anticipates that the world silver market will have registered another huge shortage in the year 2025, which will be the fifth consecutive year with demand surpassing the aggregate supply. Since early October, tens of millions of ounces of inventories have reportedly been pulled out of COMEX inventories by investors and industrial users as they move metal into their private and off-exchange inventories. Over the last few years, the vaults of London have emptied fast. The London Bullion Market Association was in possession of 31,023 metric tons of silver in June 2022. By March 2025, the volumes were down to about a third at 22,126 metric tons, its lowest level in years. According to Andy Schectman, the December delivery month opened with a tremendous physical demand on COMEX, one that began with approximately 2.4 million ounces of gold and over 40 million ounces of silver outstanding to delivery within only 2 days. Let's dive into today's video to uncover some valuable insights. Don't forget to subscribe and hit the notification bell so you never miss an update.
2 days into the December delivery month, and there's already been 23,970 gold contracts that have stood for delivery. That's 2.397 million ounces, and plus 8,305 silver contracts, or 41,525,000 troy ounces issued and stopped so far, and the month has just started. It's also relevant to note that in November is not normal. The silver deliveries ended the month at just under 20 million ounces, about 19.7 million, which it's really crazy because November is not a scheduled delivery month for either silver or gold. There was 1,267,000 ounces of gold delivered. Issued and stopped is the correct terminology. But the first day, this month, the December contract, Day one, we saw 7,330 contracts stand for delivery in silver, which is 36, almost 37 million. That's more than $2 billion worth. And although it's not a record, it's close to it. April was the biggest record of just under 12,000 contracts. But to see a 2-day, that's day one, and 2-day obviously added more, but it's just insanity, where there's already been 2.4 million ounces of gold and almost 42 million ounces of silver delivered in 2 days. This is the same type of volume that we've seen all year long. And, it's funny, you and I started talking about this in 2020 before anyone did. And now it's just mainstream mainstream in our business. And I think this will continue until it doesn't, meaning until stuff is just depleted and it's becoming more and more obvious that this is an imminent deal. At the same time, you have one of, if not the largest short position in COMEX futures market, along with a massive short position in SLV, one of the largest ever. And at the same time, you have the LBMA, which is running on fumes. And, it's a situation where the delivery via mechanisms are breaking down. Almost 90 million ounces have been delivered off of COMEX I don't know, since October 1st, 90 million. It's accelerating at a level that I don't think people understand or take for granted. And I think the way that you break that up is just to simply say that, let's make an analogy, right? For years, everyone pretended that, let's call it a cardboard box was full of cookies. There's a picture of a cookie on the outside. And the thing of it, and they would trade that. But now everyone is saying, no, I want the cookies. And people are realizing that the box is pretty much empty. And when that happens, this pretend cookie game, which you could call the derivatives, falls apart. And real cookies, gold and silver, become much more valuable. And that's why prices are rising. And why the dollar and other currencies may look weak when the truth comes out. So, yeah, I think it's a big deal.
The industrial demand of silver has increased over the last 8 years, almost by nearly 31,000 metric tons in 2016 to above 36,000 metric tons in 2024. The Silver Institute, however, predicts that its industrial demand will fall by 2 in 2025, as the world financial situation is uncertain and the silver price reaches its peak. However, due to the high thermal conductivity and the higher electricity conductivity of silver as compared to other metals, coupled with rising EVs and AI and renewable requirements, the price of the metal is expected to continue growing. According to Andy Schectman, the technical charts for silver are pointing to something huge technical target of around $96. He believes silver is the asset of a generation, not something to buy to get rich, but something that is real wealth. Now let's jump straight into the content.
The technical analysis would say you take the cup and handle when it breaks through the handle, which it has at over $50, that you take the top of the cup in 1980, which was 50, the bottom of the cup, which was $4 in the 90s, and the difference is 46. You add it to the top, and that would say $96 would be the next technical resistance level, if any, or that would be the projected next place to go. And if you take a 42-to-1 ratio right now, or even call it 45-to-1, where it's averaged for the last 100 years, the silver to gold ratio, even though it's been coming out of the ground for 5,000 years, it's 16-to-1, and now it's 7-to-1, meaning it's depleting in nature. The price ratio, largely because of, in the Western world, gold's role as a monetary metal and silver's role in industry, it's average about 45-to-1. So you take gold today at 42.40 and divide by 45, and what do you get? 42.40 divided by 45 is $95. Well, isn't that interesting? That would be where it would tell you to go, where you take the top minus the bottom, which is 46, add it to the top, that would say $96. So, I mean, if you were to see silver at the end of the year at $96, it would not be crazy at all. And if you take 42.40 and divide by 7, it's going to be somewhere around $600, 605. As insane as that sounds, that would match the geologic footprint right now. So yeah, I think silver is the asset of a generation. And I want to always hammer it home. I'm not telling people to buy it to become wealthy. It is wealth. And the biggest money in the world is showing you that. The sovereign wealth funds and the central banks, who have now largely reclassified silver a critical mineral. The U.S. government has. The EU did it in 2023. China just did it, and they are restricting exports. And China, as we've said ad nauseum on your show, the second largest producer in the world, is flying to Peru and Mexico and buying doré and concentrate, paying twice what the rest of the world will, and ship it back to refine it. If they're the second largest producer, then why the hell are they doing that? Because it's worth far more than the currency used to buy it. The prices are wrong. They've never been allowed to reach full price discovery when you have the largest concentrated commodity, concentrated short position of any commodity of the 1,000 plus traded on COMEX for years. It just speaks to the why. Why would it be the largest short position in this tiny little commodity? It's not for these banks to make money, is it? Sure, they do, but is there something bigger behind it? And we've talked about that forever. So yeah, what we're witnessing right now is the inability of the players that have used the Western dominance, which is big checkbooks, big pockets of cash, to continue to suppress the price naked. It's now an existential threat. And you're seeing that. The rumor is the reason they stopped is there's one big trader who took possession and would not roll it over a stamp for cash delivery, perhaps an Asian trader who wanted over 400 million ounces of silver. Give it to me. And so all of a sudden the cooling breaks down over Thanksgiving in one of the most thinly traded markets of all. So there's virtually no activity, but just those servers broke down. Right. So the point of it is that this signals, just like the LBMA said, sorry, it's not L plus or T plus 1, it's T plus 8 weeks. Right. We don't have enough manpower or trucks. The Western system is crumbling under their own narrative and they are losing trust. And that ain't good when a system is completely built on trust and it starts to, as the water recedes, what's the old adage, you see.
Markets are now fully pricing in a quarter-point U.S. rate cut in December, amid weak labor data and delayed economic releases after the U.S. government's 6-week shutdown. Lower real yields and a softer dollar have made non-yielding metals like silver and gold more attractive as stores of value. These triple-digit projections are very speculative and typically come with big caveats. They rely on persistent deficits and significant macro or policy shocks. If silver deficits stay in the 100 ms per year range, cumulative stock drawdowns will continue to erode above-ground inventories, structurally supporting higher prices. Triple-digit silver is being discussed more openly now. Do you believe silver can realistically hit $100+ in the next few years? We'd love to hear your thoughts in the comments below. If you enjoyed this video, give it a thumbs up and make sure to subscribe for more updates. Thanks for watching.